capital management is that management which manage current assets and current liabilities. It is the management of current assets and current liabilities. So constituents of working capital, it includes current assets and current liabilities. Current assets also includes inventories, cash in hand, cash at bank, debtors, bills, receivables, etc. And current liability contains trade creditors, bills payables, outstanding liabilities, etc. So today I am going to discuss Unit 2, Operating Environment of Working Capital. This unit contains some objectives which is very important to discuss this unit. Objective first is highlight the significance of a scanning operating environment of any business. Identify and discuss the operating environment relevant to the making of working capital decisions. Third, explain the significant aspects of monetary and credit policies. Next one is examine the impact of economic liberalization on industry as a part of operational environment. And last one is survey the changing environment in financial sector. So these objectives are very important for working capital management operations. A structure of this unit is so now I am going to discuss a structure and introduction of this topic. The term environments refers to the surrounding or circumstances which affect the life of an object or individual. As applied to business establishments or mega environments, some people asked us talk to internal and external environment. Internal environment means that environment which is controllable by the effort of management. External environment means those environment which is not controllable by the effort of management. So, operating environment of working capital, nevertheless, the term environment is meant to a large extent to signify the surrounding or factors that are extended to the firm, affecting the ability of the firm in achieving its desired objective. The nature of the environment is such that the firm will have no control on the elements constituting the environment. What the firm can do is to tailor its own policies and practices in such a way so as to gain from the change taking place in the environment. These changes may pertain to economic, legal, social, cultural, or ideological aspects. Whatever be the aspect, the firm has to gear itself to meet the challenges posed by the changing environment. Second, on the screen is the significance of a scanning the environment of business is trivial. After all, businesses cannot be run in vacuum. They exist in a natural setting surrounded by various elements in the society. The decision of a manager are influenced by the changes in this surrounding caused by the constituent elements, the customers, the government, the society within and outside the country will also have their influence of the central bank, the trade, industrial, and fiscal policy. The attitude of foreign investors is also affected the surrounding of working capital. So the attitude of foreign investor institutional setup available in the country, the attitudes of foreign investors, NRIs, the ideology beliefs of the political parties, etc., all constitute the environment system within which a business firm is operate. And third is the production schedule of the firm are to be restarted if there is a change in the preference or attitude of the customers, suppliers, competitors, and the import and export policies. So it is very important to know the element of environment. Element of environment are affect to working capital management. So element is very important concept of this unit. First is called a change in the monetary and credit policies. These elements are greatly affected to working capital management. So in the conduct of monetary policy, the following aspects become pertinent. First, money supply. Second, bank rate. Third, CRR and SLR, that is cash reserve ratio and a statutory liquidity ratio. Fourth one is interest rates, selective credit controls, and flow of credit. These all are monetary and credit policy factors which is affected to the working capital environment. So first is money supply. What do you mean by money supply? The money supply is all the currency and other liquid instruments. Liquid instruments like cash, cash in hand, cash at bank, or marketable securities, etc. in a country's economy on the date measured. The money supply roughly includes both cash and deposits that can be used almost as easily as cash. That means marketable security means it is easily convertible into cash without any more risk. So marketable security is considered factor under elements of environment and also money supply. So government issues paper, currency and coin through some combination of their central banks and treasuries. Bank regulates influence the money supply available to the public through the requirements placed on bank to hold reserves, how to extend credit and other money matters. So central government issued currencies, coins, etc. and paper, that is treasury bill, commercial paper, commercial bill. It is also issued by the public limited company. Second one is bank rate. The bank rate has been defined in section 49 of the Reserve Bank of India Act 1934 as the standard rate at which the bank is prepared to buy or rediscount bills of exchange or other commercial papers eligible for purchase under the Act. So, nevertheless, the success of bank rate policy depends on the following. First, that the bank rate of the central bank should have a prompt and decision influence on money rates and credit conditions within its area of operation. Second one is that there should be a substantial measure of elasticity of the economic structure in order that prices, wage, rents, production and trade might respond to changes in the money rates and credit conditions. Third one is that the international flow of capital should not be hampered by any arbitrary restrictions and artificial obstacles. So bank rate is very important factor to affect the environment of working capital. So bank rate is crucial issue and it is handled by the Reserve Bank of India and government. Next one is cash reserve ratio, CRR and SLR, a statutory liquidity ratio. This is also related to RBI concept, RBI norms. So cash reserve ratio stands for cash reserve ratio. It is a compulsory reserve that the central bank of the country, the Reserve Bank of India, must maintain. Every commercial bank is obligated to maintain cash reserve ratio. So this is a specified percentage of their net demand and time liabilities. So cash reserve ratio is crucial factor to affect the environment of working capital. Commercial bank must maintain the cash reserve ratio in the form of cash balance with the RBI, Reserve Bank of India. So these banks are not allowed to use the money for economic or commercial purposes. Essentially, cash reserve ratio represents the minimum percentage of deposits that a commercial bank must keep as a cash reserve with the RBI. The RBI uses cash reserve ratio to maintain liquidity and cash flow in the economy. So higher cash reserve ratio or lower cash reserve ratio, both situation can affect the environment of working capital. So it is a very important element of environment of working capital. An overview of cash reserve ratio are: first, CRR is a reserve maintained by bank with the RBI, with the instruction of RBI. Second point, it is a percentage of the bank's deposits maintained in cash form. Third one is SLR is an obligatory reserve that commercial banks must maintain themselves. Fourth point is it is a percentage of commercial banks net demand and net liabilities maintained as approved securities. So this is cash reserve ratio, which greatly impact to the environment of working capital. for a specific percentage of the net demand and liabilities. So CRR and SLR both are crucial factor for environment of working capital. Next one is interest rates. It is also fixed by the Reserve Bank of India, and this factor is affected to the environment of working capital. So the interest rate is the amount of lender charges a borrower and is a percentage of the principal. The amount loaned. The interest rate on a loan is typically noted on an annual basis known as the annual percentage rate, APR in short form. Next one is selective credit controls. So selective credit controls is a tool in the hands of Reserve Bank of India to restrict bank finance against sensitive commodities. These sensitive commodities generally include food grains, that is cereals, pulses, etc. Cotton textiles, which include cotton yarn, man-made fibers and yarn. Third, selected major oil seeds, indigenously grown, groundnut, mustard, cottonseed. That means these all commodities prices are controlled by the RBI with the help of selective credit control. So next one is flow of credit. Flow of credit means the availability of credit. High credit flow indicates low interest rates because high supply down the price of this goods or credit, etc. Loose credit requirements and ease of borrowing money. Low credit flow indicates the opposite and vice versa. So these elements are very important whenever the formulation of working capital, because these factors are greatly influenced to environment of working capital. Second element, changes in inflation. Changes in inflation is also affect to the environment of working capital. It may increased or decreased. So third one is changes in financial market. Financial market is a great factor to influence the environment of working capital. What is financial market? Financial market are those markets where securities are traded. Securities means equity, instruments, bonds, debentures, etc. This market is divided into two parts. First is called money market and second is called capital market. Money market are those markets where short-term securities are traded. The instrument of money markets are call money market, commercial paper, commercial bill, treasury bill, certificate of deposit. And second one is capital market, means those market where securities are long-term securities are traded like equity share, bonds, debentures, etc. It is always long term. And capital market has also two types. First is called primary market and second is called secondary market. Primary market are those market where equity share are issued firstly. That means IPO, initial public offering. And second one is secondary market. This is also called a stock exchange like Bombay Stock Exchange, National Stock Exchange, OTC, over the counter exchange of India, etc. It may organized or unorganized. Both markets are affected to the environment of working capital. The role of financial market is paramount in the mobilization and allocation of savings in the economy. They are the agencies that provide necessary funds for all productive purpose. In addition, the role of financial markets is increasingly all productive purpose. So financial market are great impact on environment of working capital. So you can see on the screen elements of environment. The main organized financial markets in India are first the credit market, which is dominated by commercial banks. And second is the money market with call money segment forming a sizable proportion. Third one is equity and term lending market consisting of primary, secondary and term lending segments. That means primary and secondary market, these markets are always related to capital market. It is always long term, not short term. Money market is always short term. Short term means below 1 year, long term means above 1 year. And the regulatory body of money market is RBI, Reserve Bank of India, and the regulatory body of capital market is Security Exchange Board of India, SEBI. So next, elements of environment is fourth point, corporate debt market comprising PSU bonds and corporate debentures. Bonds and debenture, these are debt instruments to help to raise the capital of the company. It has fixed rate of interest and definite period. Next one is fifth, gilt-edged market for government securities. Government securities issue gilt-edged market, gilt-edged securities, which is very safe, but rate of interest is nominal. Next one is housing finance market. 7 point is hire purchase and leasing finance market, wherein the non-bank financial companies NBFC predominate. Insurance market, foreign exchange market, these all markets are affected to environment of working capital. Or why environment of working capital? So unit 2 are completed, and I am going to discuss with unit 3, which is determination of working capital. This is Very important topic for working capital management, determination of working capital. This unit contains the following objectives: provide a framework for assessing the working capital requirements of a firm. That means working capital cycle. It's a tools to find the requirement of working capital. So second one is explain the concept of operating cycle and its work in the determination of working capital requirements. Third one is examine the theoretical basis for the determination of working capital needs. Next one is highlight the recommendation of Tandon Committee. It is very important committee. Next one, discuss the present policy of the commercial banks in the determining working capital requirements of their borrowers. And the structure of this unit is first introduction, second one is determination of working capital need, different approaches. Third is factor influencing determination. Fourth is Tandon Committee norms, and fourth, present policy of banks. So these units are contained these objectives and the structure and introduction of this unit. That means determination of working capital is the determinant of working capital are items that have a direct impact on the amount invested in current assets and current liabilities, which has discussed earlier net working capital and gross working capital. Net working capital means it is the excess of current asset over current liabilities. And gross working capital is the overall investment in current asset is called gross working capital. So managers like to keep a close watch over these factors, since working capital can absorb a large part of the funding that an organization has at its disposal. So determinants of working capital or determination of working capital is very important topic for this unit or working capital management. So determination of working capital needs different approach. Next topic on your screen, you can see on the screen. First, industry norm approach. Industry norm approach means this approach is based on the premises that every company is guided by the industry practice. If a majority of the units constituting a particular industry adopt a type of practice, other units may also follow suitable concept. This may finally turn out to be an industry practice. This practice decided the normal level of investments in receivables is to a great extent influenced by the industry practices. So industry norms approach contain different aspects. So first is the problem in following this type of an approach are obvious. The classification of units into a particular theory, industry is not that easy. Firms may not be susceptible for such a neat classification when the units are multi-product firms. Second is deciding an average to represent a particular industry is highly difficult. So this approach is based on the premises that every company is guided by the industry practice. So second one is economic modeling approach. That approach is very important concept for gross working capital or net working capital. Economic modeling approach is a practical approach which include different formulas like economic modeling approach is equal to or economic order quantity which is related to inventory is under root 2a by C. Under root 2a, A stands for annual consumptions, S for ordering cost per order, and C for carrying cost per annum. So this formula is important for determining the working capital requirement or also inventory requirement. How much order placed for inventory or working capital is very important. So economic modeling approach define how much quantity corporate purchase, even inventory, cash, etc. Because over working capitalization or under working capitalization both are very dangerous for the organization. Over capitalization means more interest paid to outsiders, which is affected to your profits, damage to your profits, and undercapitalization indicates the interruption of production process. So economic modeling approach is very important for the determination of working capital needs, different approach. And third one is a strategic choice approach. A strategic choice approach is very important and clear approach for the working capital requirement. Unlike industry approach, which is early discussed about industry norm approach, unlike industry norm approach, economic modeling approach, this is not a standard method which suggests certain benchmarks to work with. The earlier methods suggest the use of certain yardstick or guidelines. Irrespective of the difference in size of the business units, nature of industry, and business operations or competition. So a strategic choice approach is optional for the management, whether you adopt as you wish or not. So these models are very important for determination of working capital needs, different approaches, and this are conclusion of this approach. Next topic is factors influencing determination. Factors influencing determination, which means those factors which is affected to the determination of working capital. So first is operating cycle. Operating cycle means working capital cycle. It is also called working capital cycle. So I have discussed in previous class working capital cycle. It's very important techniques or tools to know how many days working capital requirement is necessary. So first is raw material holding periods. Suppose company has 20 days for raw material holding periods. Second is work in progress holding period. It has 10 days. Then total number of days is 30. 20 days in raw material holding periods and 10 days in work in progress holding periods. And next step one is finished goods. Finished goods holding period, suppose 10 days holding, and debtors holding period minus credit availed. Working capital cycle, the formula of working capital cycle is raw material holding period plus work in progress holding period plus finished goods holding period plus debtor holding period minus credit availed, which is given by creditors. It is always less in this formula. Second one is nature of business. The requirement of working capital also varies according to the nature of business. It may high or low according to the nature of business. So nature of business, it may be fast moving consumer goods or slow moving consumer goods. In case of fast moving consumer goods, it is easily convert into cash from stocks, because fast moving consumer goods fastly consumed by the consumers. So company has a sufficient fund in this company. But where slow moving consumer goods, SMCG firm, there is no sufficient money available at any time to pay debt capital, to pay interest on debt capital, to pay in current liabilities, etc. So nature of business is very important factor for determination of working capital. Third one is on your screen, management's attitude toward risk. So proactive manager can take risk for this. Next point is growth and expansion of business. Growth and expansion, that means you need more fund, more working capital to utilize in growth and expansion of business. So working capital requirement is depending upon the policy of the business, which is growth or expansion of the business. And next one is product policies. It is also affected to the determination of working capital. Important factor of product policies. Next one is position of the business cycle. I have discussed in previous class position of the business cycle. Like in case of manufacturing concern, firstly, you invest working capital in raw material and then work in progress and then finished goods and then debtors and debtors convertible into cash, conversion into cash. So business cycle is very lengthy in case of manufacturing concern. Firstly, your working capital locked in raw material and then work in progress holding period and then finished goods holding period and then debtor holding period. And after that, your working capital convert into cash. But trading, in case of trading concern, you can see firstly invested in materials which you are trade. You are trading these materials. So purchase these materials, then working capital has been locked. And then sale to customers. Sale to customers means your working capital is easily convertible into cash. So it is very important factor, each position of the business cycle. Next one is term of purchase and sale. So many companies use term credit term, which means you give loan, you give goods on credit basis, and your term and condition is very crucial, is very tough, then you survive in this field. You can survive in this field. But easy credit policy may risk incurred because many debtors are converted into bad debts. So आप लोग देखेंगे कि डिपेंड करता है कि डेटर्स को जो आप क्रेडिट टर्म प्रोवाइड कर रहे हैं, लाइक कोई आपके यहां से उधार ले जा रहा है, ऑन क्रेडिट सेल आप कर रहे हैं, तो आपका टर्म एंड कंडीशन क्या होगा, दिस इज वेरी इंपॉर्टेंट फैक्टर. आप 60 डेज के लिए उनको ऑन क्रेडिट सेल कर रहे हैं, आप 90 डेज के लिए कर रहे हैं, मैटर करता है कि आप जितने दिनों के लिए उसको उधार देंगे, ऑन क्रेडिट सेल करेंगे, आपका वर्किंग कैपिटल उतने दिनों के लिए ब्लॉक हो जाएगा. So credit term provided by the company to the customers is very crucial issues. आप इसे बहुत टफ भी नहीं कर सकते हैं, बहुत लिबरल भी नहीं रख सकते हैं, बिकॉज अगर आप बहुत टफ करेंगे तो कस्टमर किसी दूसरे बिजनेसमैन बिजनेस के पास चला जाएगा, आपका कस्टमर कहीं और से ले लेगा सामान। क्योंकि क्रेडिट फैसिलिटीज जहां मिल रहा है उसको हर कोई अवेल करना चाहता है। एवरी पर्सन होल्ड कैश इन हैंड। हर कोई चाहता है कि कैश उसके पास रहे, कैश उसके साथ में रहे। तो क्रेडिट फैसिलिटी अगर आप बहुत ज्यादा आप लिबरल रख रहे हैं, दैट मीन्स आप 90 डेज के लिए दे रहे हैं या 120 डेज के लिए दे रहे हैं, दैट मीन्स कि आपका वर्किंग कैपिटल शॉर्ट होगा इन दिस मीन पीरियड। तो वर्किंग कैपिटल को आपको मेंटेन रखने के लिए जो आप टर्म दे रहे हैं, परचेज एंड सेल्स का जो टर्म है, उसको बेहतर से यूटिलाइज आप करें। टर्म्स ऑफ परचेज है, दैट दिस इज रिलेटेड टू योर क्रेडिटर्स, कि आपका क्रेडिटर आपको क्या दे रहा है, 20 डेज दे रहा है, 30 डेज दे रहा है, वो भी डिपेंड करता है। बिकॉज क्रेडिटर अगर आपको क्रेडिट अवेल्ड फैसिलिटीज प्रोवाइड कर रहा है तो वहां पे आपका वर्किंग कैपिटल इन्वेस्ट नहीं हो रहा है, बल्कि उतने दिनों तक आप सेफ जोन में हैं। बट अगर आप सेल कर रहे हैं, प्रोडक्ट को सेल कर रहे हैं ऑन क्रेडिट बेसिस, तो आपका भी डेटर जनरेट होगा, तो आपको भी वहां पे मैनेज करना होगा कि डेटर से कितना तेजी से कैश में कन्वर्जन कर लें। सो इट इज वेरी इंपॉर्टेंट to discuss about the credit terms for a business. So these all factors are influenced the determination of working capital. So next topic is RBI guidelines in financing working capital. New guidelines issued by the RBI. So these points are very important for the working capital. So first is RBI has stipulated a minimum level of loan component in fund-based working capital finance. Second one is it also specified a mandatory credit conversion factor, that is CCF, also called CCF in short term, for the undrawn part of the cash credit limit or the overdraft facility given. Third point is redefined the large borrowers as having fund-based working capital limit of rupees 150 crore and above. This was rupees 100 crore earlier. So RBI increased this limit from 100 crore to 150 crore. Next one is with effect from October 2018. The minimum loan component is fixed as 40% of the total limit. That means it is a very important point because it affects the working capital, the component of working capital, composition of working capital, influence the working capital. Next one is the credit conversion factors, CCF, for large borrowers for the utilized portion of cash credit overdraft was put at 20% with effect from April 1st, 2019. It is a great decision taken by the RBI. The credit conversion factor CCF for large borrowers for the utilized portion of cash credit overdraft was put at 20% with effect from April 1st, 2019. Next point, the minimum loan component is proposed to be enhanced from 40% to 60% with effect from April 1st, 2019. Next point, in case of consortium lending, all the lenders by mutual agreement fix up ground rules for sharing cash credit and loan components. Cash credit means it is a facility provided by the bank to the businessman. It is a great facilities provided by the banking company to a businessman. Next point is banks are also provided with freedom to decide on the splitting of loan component with different maturity periods as per the need of the borrowers. So this decision is very important and it is a great decision taken by the RBI because many person, बहुत सारे ऐसे लोग होते हैं जिनको अलग अलग टाइम पीरियड पे लोन चाहिए. लाइक कोई इंटरेस्टेड है शॉर्ट टर्म पीरियड के लिए, कोई इंटरेस्टेड है लॉन्ग पीरियड के लिए, किसी को 1 साल के लिए लोन चाहिए, किसी को 2 साल के लिए लोन चाहिए. दैट मीन्स मैच्योरिटी पीरियड्स इज इंपॉर्टेंट. दूसरी बात, अगर इन्वेस्टमेंट के पॉइंट ऑफ व्यू से हम आप देखें तो इन्वेस्टर कहीं जब इन्वेस्ट करता है तो उसकी भी एक प्रायोरिटी होती है, टाइम प्रायोरिटी, कि वो कितने दिनों के लिए इन्वेस्ट करना चाहता है. सपोज आपके पास 1 लाख रुपया है और रिक्वायरमेंट है कि उसको आप यूटिलाइज करेंगे नेक्स्ट ईयर में, तो दैट मीन्स आपके लिए वो इन्वेस्टमेंट सबसे बेटर होगा जो 1 साल में आपको अच्छा रिटर्न दे और उसकी मैच्योरिटी पीरियड 1 ईयर हो. लेकिन आपके पास अगर सफिशिएंट फंड अवेलेबल है, पैसे की कोई अभी कमी नहीं है, कोई स्कार्सिटी नहीं है, तो आप उस पैसे को लॉन्ग टर्म के लिए आप डिपॉजिट कर सकते हैं, इन्वेस्ट कर सकते हैं. तो डिफरेंट मैच्योरिटी पीरियड्स रखने से ये बेनिफिट हुआ कि डिफरेंट इन्वेस्टर कनेक्ट होंगे और सेविंग का मोबिलाइजेशन हो पाएगा, मोबिलाइजेशन ऑफ फंड हो पाएगा, जिससे हमारा इंडियन इकोनॉमी थोड़ा डेवलप होगा. और सेविंग जब मोबिलाइज होगा तो जिनको वर्किंग कैपिटल की रिक्वायरमेंट है एनवायरमेंट में या सोसाइटी में, वहां पे आपका सेविंग रोटेट होगा और इकोनॉमिक ग्रोथ में वो हेल्पफुल होगा आपका. द नेक्स्ट वन इज द अदर कंडीशंस imposed on the proper use of working capital finance is that the borrowers are not supposed to buy assets or make long term investments. So these all RBI guidelines in financing working capital is very important for current environment. So these units are completed and block first. The block first contains 3 units and these all are completed by me. I will discuss in next class the second block, that is management of current assets. So this is very important for a business, that the management of current assets is effectively, which leads to profit of the business. So management of current assets means current assets involves inventory, cash, debtors, bills, receivables, etc. So next topic is management of current assets. हम लोग उस टॉपिक में सीखेंगे कि एक ऑर्गेनाइजेशन करंट एसेट्स को किस तरह से मैनेज करता है, हाउ टू मैनेज करंट एसेट्स इन एन ऑर्गेनाइजेशन. इन्वेंट्री को कैसे मैनेज करेंगे, हाउ टू मैनेज इन्वेंट्री, बिकॉज इन्वेंट्री इज अ इंपॉर्टेंट फैक्टर ऑफ द बिजनेस. Overstocking or understocking both are very risky. So optimum level of inventory is important for the business. So next class I will be discuss this topic, management of current assets.